Kim, I want to talk a little bit now about your strategy, how you approach investing, and for clients, for viewers, to understand that you manage a portfolio for direct clients, but also for other investment advisors who can access your fund, correct?
Sure. Yes. Yes.
And what's the approach?
What we're
What's your
doing,
strategy?
yeah, uh, um, it's all about risk remediation. I was trying to encapsulate it. So what we're doing is we're running a concentrated portfolio of US traded stocks that are $1 billion or more in market cap. So we don't have teeny tiny companies, but we do have some smaller firms in there. And what we're trying to do is keep up with the market. And we do that by maintaining a sector weighting that approximates the S&P 500. So for example, we have about a 4% weighting in energy, a 25% weighting in technology, and concentrated means our original buy of a position is probably around 3%. So we have 33 names right now in the portfolio with a couple of smaller positions. And it's been working well since 2020.
Yeah. And these will be your 3-year numbers coming out. And that's a big marker in the investment world. But you can't tell us what they are yet, right?
No, I can't. Sorry.
Okay, and that's SEC rules.
We're right on the
we'll
cusp
have you on.
there.
Okay, perfect.
Okay.
But we'll get that to our viewers when they come out. But why is it that you like sector neutral? You're mimicking the sector weighting of the S&P 500, and then I guess where your alpha or where your expertise comes in is actually choosing the best stocks within those sectors. Why do you think that that's a good approach?
Right. Well, for a couple of reasons. First of all, the person who I first started I created this for, they wanted a little bit of growth, but not a tremendous amount of risk. And what I've always seen, especially watching financial shows, is that at the beginning of the year, we all give our guess about this is the year for energy or financials. It's going to be the year or whatever. And people overweight and underweight these sectors. It's a way to do it. But if you're also a stock picker, it's really hard to pick, really good companies and then overweight the sector. And I have not seen a whole lot of people that can do both, and both well, and both over and over and over. And at my prior firm, one year we did not have any energy, and it was the year for energy. Lesson learned, right? So it's good to be older. You get to see the past and go, I'm not going to make that mistake. I'll make a different mistake, but not that one. So that's how we came up with this. And it's been tracking really well.
Interesting. And why that's also so important as well, to your point about, a lot of people don't get both calls right. So you'll have hedge funds and macro hedge funds that just make the macro call. And that's what they're doing. And they're not really picking the stocks. Or you have stock pickers. So it's really important for people to understand you're not good at everything. Even when I worked on Wall Street, we could have an analyst that had the great kind of big picture call, couldn't pick a stock. You almost did, just did the opposite. So, and that's true. We were like, okay, we're just going to do the opposite. It's a buy, we're selling. So it's true. So that's the way it works. Yeah. So we don't have to talk about the sector weightings. Yeah, go ahead.
Oh, the other thing that we do, and this kind of has been the secret to our success, is, as I said, we have, $1 billion and up market cap. What that's doing is that's allowing us to have some mid-cap names. And because we're going for really high quality companies that make products that are going to really satisfy their customers, and by the way, they probably have a good process for doing that, they are often the object of takeovers from the larger firms that are also in the mix. So that's where a lot of the alpha comes from.
Understood. Let's talk about a couple of names that you own. I'm curious. Coca-Cola.
Yep. Well,
why Coke?
My first career was a software engineer. So I look through the lens of how well a company deploys technology. Makes sense. And oddly enough, Coca-Cola is really a good user of technology, and that makes it a very profitable company. I also like how they have gone off of their long-time fizzy drinks only kind of menu, and they now have coffee, and they're expanding into alcohol. So they have a good handle on what they need to do, delight the customer, and they're trying a lot of different things to do that.
And is valuation still attractive here?
It is, and that's because we're looking 3 to 5 years in the future.